What's up, apes? Welcome back to the Daily Peels video stream of the day. My name is David, and thank you for tuning back in with us once again. It is currently Tuesday, almost said Monday, May 28th, 2024, currently about 7:46 p.m., coming at you live once again with our Daily Peel video stream. Of course, getting you guys ready for markets and the ticker tape tomorrow so that you don't blow yourself up like we somehow managed to avoid just about every day. We'll be getting deep into the markets in just a quick minute, but before we do that, hope everybody had an absolutely phenomenal Memorial Day. It's a great reason to celebrate. It's a great holiday that we have here. Really, any 3-day weekend is honestly a great excuse to celebrate and get unbelievably hammered, regardless of what your parents say or how much of a problem you're causing at the family barbecue. So, hope everybody had a great weekend. Hope you got nice and rowdy as the troops would have wanted you to. Now, speaking of getting very rowdy, Boston Celtics, baby. If anybody wasn't listening to my sports takes beforehand, it has to be a lock at this point. What have they lost? 3 games combined in the playoffs so far? I mean, absolutely walking to the NBA Finals, just like we all kind of knew that they would. The only person that might have had a better Memorial Day weekend than you or me is, of course, Jaylen Brown winning the Eastern Conference Finals MVP award. So, shout out to the Celtics. We will be, in all honesty, playing the Mavs relatively soon, unless the Timberwolves can pull off an absolute miracle. So, stay tuned for Luka versus Jason Tatum and Jaylen Brown. And, of course, we'll be issuing all the commentary that we can. Fuck Kyrie Irving, by the way. All right. Speaking of fucking things, let's talk about WSO Alpha. So, the portfolio, rough start to the week. Clearly was not celebrating Memorial Day in the most effective way possible. The portfolio as a whole was down 40.4%. I almost said 40%, but 0.4%, about 40 basis points on the day. The S&P 500 was down about 2 basis points, and the NASDAQ down about 58 basis points. So, we're doing our usual thing. We are underperforming. Well, we're outperforming the NASDAQ on down days, and we're underperforming on up days. And we're pretty much just beating the S&P 500 in every which way, except when that index happens to go down for the day. Then we'll probably go down a little bit further, but we're still right in the territory of where we'd want to be. Now, given that our year-to-date returns is only 9.35%, that is definitely not where we want to be. But like I said, guys, it's too easy to beat these indexes, so we want to make sure that they get an opportunity to enjoy sitting in that top seat for a little while before we come and dethrone them once again. So stay tuned for more. Of course, Alpha going well. We actually have a new offering that's coming alongside Alpha. It's called WSO Beta, and as you can tell by the name, it's much more fitting for somebody such as myself, and it's going to be much more actively traded, degenerate gambling portfolio, and we're pretty excited to get started with it. So make sure to come gamble along with me, and there will be more details coming soon. Getting into some of the banana bits. So the yield curve as a metric in terms of indicating recessions has been wildly disappointing, even more disappointing than my transcripts were to my parents when I was in high school and college. And that's pretty impressive to be able to beat out something like that. Even the fucking guy who popularized the yield curve, Harvey Campbell, he's a professor over at Duke University, he even came around and said, don't rely on one metric to tell you anything about the economy. We'll be diving deep in just a minute into exactly why relying on just one metric is bullshit and why trusting the opinions of Americans, economists, and really anybody besides yourself is probably a tough call as well. Meanwhile, Hess shareholders, this is the large, oil, gas, energy commodity company, they managed to get shareholders to agree to this $53 billion deal with Chevron, so expect those two companies to attempt to be merging, and then expect Lee and Khan to try to stop it for a couple of months, and then for them to inevitably merge once again after we've wasted a good amount of taxpayer dollars on trying to actually stop that merger. Finally, holding cash in your portfolio, it's becoming as fucking lame as saying the word lit or riz these days, completely falling out of style. Many people are absolutely reallocating to equities and even something as boring as fixed income. So cash is definitely not the way of going forward. A lot of people say cash is king. Others say cash is trash. Personally, just make sure you're gambling out there and having fun along the way. Let's go ahead and get into one of the macro monkey main stories of the day here. So we are talking about Americonomists. And no, I didn't just have a stroke when I said that, but it's just such a clever combination of the words American and economist. So we had to roll with it right there. Because, of course, what we're talking about here is a poll where we essentially asked babies what they think about calculus. I mean, that's effectively what you're doing when you're polling the U.S. public on current economic situations. I mean, it's not that nobody, they don't know what's going on, it's that they're not paying attention. Like, if you're a normal person and you're not autistic about financial markets, then, why would you pay attention to any of this stuff? So, of course, The Guardian had one of those pollsters, Harris Polls, I'm pretty sure, run this kind of questionnaire with 2,119 Americans, and there are some pretty funny takeaways right here. So I'm very used to having no clue what's going on personally. I don't know if the rest of the 340 million Americans are, and that's probably why we're feeling so goddamn insecure all the time. So like I said, a little bit over 2,100 Americans were polled over a series of questions, and man, their answers were ridiculous. To showcase the first one, take a look at this chart that you definitely can't see whatsoever right here. So what we're seeing, the question that this is representing or kind of compiling the data on is basically asking if they think the U.S. economy is currently in a recession. This red line that you see at the top is people who self-identify as Republicans, about 67% of them, 53% of self-identified independents, and 49% of self-identified Democrats actually believe that the United States is currently in a recession. Weighting this against, basic population data, that's about 58% of Americans that currently think that the U.S. economy is in a recession. Absolutely ridiculous take. Nothing could be further from the truth, and one of our biggest pieces of evidence is right here. And it was a great day for 𝗪𝗏𝗡𝗂𝗪 or Ticker, however the fuck you pronounce the name of that Substack, to be publishing this chart right here. So from what we can see, every important economic metric is moving up and to the right. Now, we do have some issues with household employment and industrial production starting to trend a little bit lower in recent times, but the overarching story, especially over the past couple of years, is that the economy is absolutely on fire. So why do Americans not feel that? Now, like I said, in this last example that we have here, I mean, it's clear that it's not because of political bias, because otherwise 49% of the sitting president's party wouldn't be saying, like, no, the economy is complete trash just for political reasons. Like, that doesn't make any sense whatsoever. So there's got to be something else. But diving into the data, it becomes pretty obvious relatively quickly. And that's why we move on to our third chart of the day. And of course, what we're showing here is real disposable personal incomes, or basically what's reported as real disposable personal incomes in the PCE report on a monthly basis. We have a new PCE coming out tomorrow, so this is based on March's data because the next PCE is going to be about April, so we're a little bit delayed in this regard. But take a look at this. We're measuring real disposable personal incomes once again. The absolute dollar amount is this darker blue, like, fucking bar chart that you see right here. And the annual change, so compared to a year prior, kind of a rolling 12-month change in this lighter blue color that you see overlaid as that line chart. And basically, in case you can't tell by looking at this already, completely flat. Like, there was some volatility in the post-COVID period, and we saw some upticks in the annual rate of income growth for a little bit there, basically all throughout like the first 10 months of 2023, has completely turned around now and is returning to its historical trends. And unfortunately, that historical trend is basically not growing whatsoever. So it doesn't take a whole lot of investigation to find out why we might be feeling a little bit uneasy. Now, this is real disposable personal income, so it's already adjusted for inflation, something like that in March. That means real disposable personal incomes grew by an immaculate 0.01%, literally 1 basis point for the year. Again, that is inflation adjusted, so it's growing in absolute and relative terms, kind of a... So there's not much to complain about in that sense, but still, has anybody on earth ever been excited about their earnings growing 0.01%? So if we go ahead and take a step back to the start of this chart, this shows us March 2018, excuse me, coming to March of this year. That is a total growth in real personal disposable incomes of 12.64%. Annualized, that comes out to 2.013%, which is pretty fucking remarkable because that's exactly what the Federal Reserve inflation target is. Unfortunately, they weren't able to get inflation to that level, or they certainly haven't been so far. But, you know, the other thing is, who gets excited about a raise of 2%? Like, if your boss came up to you and said, all right, we're going to give you a raise this year, it's going to be 2%, or, you know, it's going to be inflation plus 0.01%. That's going to be your raise for the year. Nobody would want to work for that company. So even though this is adjusted for inflation, and yes, earnings are technically growing more than the cost of living for the most part in the aggregate of the United States, it's still very difficult to get excited about this. Basically, the difference that we're seeing here is the media is talking about the macro economy. But when you ask Americans about the economy, they're going to view it through their own personal circumstances, through their own individual microeconomy. So what we're seeing right now is a great imbalance between micro and macro economies here in the United States. Corporate profits are surging. Pretty much everything for the ownership class, like people who are kind of in that top 5-10% of income earners, of asset owners, and of general wealth as a whole in the United States are killing it. They've never been doing better before. Obviously, these are the people who are kind of the loudest voices that we're going to be listening to, seeing on X, TikTok, and all these other bullshit ass, wherever the fuck people get their news. But the rest of Americans are definitely not doing too well. Seeing wage growth is kind of stagnate, especially over the past couple of months. It's arguably slowed down in a lot of areas. And we are still seeing upticks, especially on the lower income earning spectrum. But again, it's such small dollar amounts that it really doesn't materially impact anybody's living conditions whatsoever. So it's a great imbalance between the macroeconomy and translating the success of U.S. companies and, you know, the United States economy, the miracle that is the United States economy as a whole, is having a difficult time passing those benefits on to the rest of us, on to actual normal everyday Americans. So it's very different than what we're used to in the past, because typically when the U.S. economy is performing well, that bodes well for the middle class. But the middle class in the post-pandemic period has done nothing but shrink. So that's very much a trend that we're going to want to reverse, especially if we would like to avoid a, you know, revolution, uprising, civil war, whatever term you want to call it, in the next, call it 50 to 100 years or so. So that would definitely be a great thing to figure out, but trust me, I do not have the answers for us on that here today. No, pretty amazing. We don't have the answers for something over here. But what I do have the answer of is why idiocy is on the rise here in financial markets. Now, I wasn't trying to go on to this next chart right here, so I'm totally spoiling it right there. But we are seeing a distinct rise in idiocy among financial markets right now, and it happened once again on Tuesday. GameStop shares were up 25.2% for the session for absolutely no reason whatsoever. So this is right alongside the rise in nonsense, bullshittery, distinct lack of IQ among people with the ability to buy stocks. All of those reasons right here are the drivers for GameStop's rise. But specific news came out on Friday that GameStop, AMC, these meme stocks and their management teams, they're using their brains a little bit, very much unlike their shareholders, because they took advantage of this retail pump and basically said, we might as well sell shares into this market. There's clearly demand for the shares, so let's go ahead and do a kind of secondary offering of shares on the public markets right now. And so that allows them to effectively raise cash. GameStop raised $933.4 million via the stock sale of 45 million additional shares. That was announced on Friday. That more than doubles their cash balance. And in case you forgot, the cash balance of GameStop, literally the management team has allowed Ryan Cohen, the CEO, the founder of Chewy.com, I'm pretty sure, and some idiot who woke up from his mom's basement with a decent idea one day and paid somebody else to build out a website for it, effectively is what he did. And now the GameStop board of directors is allowing him to effectively day trade the company's cash balance. So he just got another $933.4 million added to his book. Financial advisors around the world should be studying this right here to see how to grow their AUM. But, you know, really no news whatsoever. Obviously, shares were up because the cash balance grew quite a bit. They're going to come crashing back down eventually unless GameStop develops an actual business plan. But I don't know about you guys. CEO day trading doesn't seem like too great of an idea unless your CEO happens to be Jesse Livermore, Jim Simons, or somebody with a functional brain. Moving on down into our... God damn it, why does that keep fucking happening? This is my lack of technology knowledge at play right here, so don't bully me in the comments or I'll fucking cry about it. Anyway, moving on to our next stop, we have NVIDIA here, up 7.1% on the session. Who is surprised? This is literally the exact opposite of GameStop. These guys they're making too much money is the problem over at NVIDIA. They have no idea what to do with it, so they've effectively established this flywheel for themselves, because NVIDIA has a venture capital arm. It's called N Ventures, and here they're basically able to invent demand for their products, because what they do is provide funding for startup AI companies. What do startup AI companies need more than anything else? Oh, GPUs. And who's the best GPUs in the world? Obviously, NVIDIA. So this is a rare business that has the ability to create its own demand, and that's something that we should all be buying hand over fist. NVIDIA also, they left us last week with, you know, an absolute hammer of an earnings report, one of the greatest in the entire history of Wall Street, so it's not surprising to see this thing continue to rise, especially after such a goddamn patriotic weekend. Well, I want to be buying up these companies. Now, NVIDIA's market cap is currently larger than the combined market cap of, I think it's Amazon, Walmart, and Netflix right now, which is absolutely unspeakably ridiculous, but so definitely be on the lookout there. Now, the shares rose on the day because specifically xAI, this is Elon Musk's artificial intelligence startup, raised about $6 billion in funding via Series B. We don't know if NVIDIA was involved in that Series B, but it's another company that's going to be buying a shitload of GPUs from NVIDIA, so obviously shares up and to the right, just like they should be. Moving on down below into DraftKings, this is literally the opposite vibe. This is killing the American dream right here. You are always one bet away from financial freedom. That is some of the best advice I've ever heard in my entire life. And the state of Illinois is trying to kill that for all of the Chicagoans and whatever other fucking cities are in Illinois. So they have decided to become the second biggest losers in the entire United States by levying a 40% tax on the adjusted gross revenue of these sports books. And I say second biggest losers because New York is, of course, number one. Who fucking... I don't know why anybody would want to live in or have any kind of association with New York, but they have a 51% tax on adjusted gross revenue of the sportsbook operators as well. This really only applies to the big players. It's not like startups or like fucking pieces of shit sportsbook operators like BetMGM or anything. It's pretty much DraftKings and FanDuel that are being hit with this. So obviously DraftKings is a little bit upset. Shares were down 10.3% on the session because Illinois is home to the third largest city in the United States in Chicago, and I believe is the third largest betting market in the US as well. Who knew, behind California and New York. Moving on into our final stock of the day. Speaking of Elon Musk, we have Tesla, down 1.4% on the day for literally the dumbest reason of all time. I'm not lying to you when I say that the reason shares fell is because Tesla shareholders were advised to vote against Tesla shareholders because non-Tesla shareholders disagree with past votes by, you guessed it, Tesla shareholders. So, of course, we're talking about Elon Musk's pay package right here. Back in 2018, shareholders basically agreed to give this guy a shit ton of the company if these absolutely astronomical, completely unrealistic expectations were actually lived up to. And what do you know? Elon pulled it off. He met all of these expectations, and the board, well, not the board, but the fucking Delaware courts decided to stick their nose into it last year, basically thumbed him up the ass and said, you are not getting this money that was agreed to over the past 5 years. Guy takes no salary, gets basically no payment whatsoever, and they voided this pay package. So right now, the pay package is valued at $46 billion. It's basically 10 years worth of options grants. That's kind of how it's actually going to function. This firm, Glass Lewis, has advised shareholders not to do so because it's allegedly dilutive to EPS. I would say if this upsets Elon Musk enough where he considers leaving the company or, taking a significant amount of their IP and making it public, as he has done with all of Tesla's patents, for example, that hurts the value of the company a hell of a lot more than a couple of cents at their next earnings call. All right, but with that said, let's go ahead and move on down into our final story of the day. Of course, our thought banana. We are talking about the biggest election of all time, and no, I'm not talking about the United States at all. First and foremost, I want to give a quick shout out to Athens and Pericles and all those fuckers back in the day who created this system of democracy that has subsequently destroyed the entire world in the aftermath period. More than 2 billion inhabitants of this planet we call Earth are going to be hitting the polls this year, setting their votes with very varying degrees of how much they're actually going to count depending on their geography, or at least according to what our governments tell us. Everybody from the United States to Iran to Russia, Venezuela, fucking Mexico, who else is doing it? Uruguay, Lithuania, Croatia, every important country, and of course, India. So India, this is the largest country in the entire world. They have the most people. It's the 5th largest economy. It's the fastest growing large economy in the entire world. This is a budding superpower. Like, if I could buy stock in one country, there is nothing I would be more balls deep in than India. Or maybe Mexico too. They would definitely be up there, but still, India does not match. Nothing matches India whatsoever. 2 states in India alone, they are called Uttar Pradesh and Maharashtra. Both, if you just take these 2 states, they outnumber the entirety of the United States by a long shot. So there's close to 1.5 billion people in India. It's just about 4 or 5 times the size of the United States. And so when we look at this chart right here, we are looking at percentage of total world GDP made up by each economy. So this giant blue chunk that you see, 26.4%, that's the United States. A little bit of a shaky number. I think they're using 2022 data in this chart, so it's not, don't live or die by this right here, but it's one of the best charts that I can find on this without actually having to make it. The green is literally the entire rest of the world. It's not included in this chart. So you have the US, you have China, Germany, Japan, and then this orange slice right here is India, and that is far and away the fastest growing. So considering this is the most populated country in the world, there's 970 million people that are going to be able to vote in this Indian election, and it's the fastest growing large economy in the entire world. We should probably be paying a little bit of attention. So India, things function a little bit differently. Now, the Indians didn't kick out the British until the 20th century, so they're much more similar to England's government than the United States, unfortunately for them. And so that means that they are not actually directly voting for the president or their leader, which in this case is a prime minister over in India. Not that the U.S. directly votes for the president either. We have the Electoral College over here. They do it a little bit differently. Effectively, Indians go to the polls, and it's almost like they're voting for the party that they want to see in charge rather than the actual person. So what they do is Indians go and vote for the Lok Sabha, and this is basically the House of Representatives for the Indian subcontinent. It's the lower house of parliament. It's the House of Commons in India. It's just India's version of that. And so Indians go to the polls and they vote for their representatives of their localities. And then based on the winning party of the Lok Sabha then chooses the leader of their party, and that person becomes the prime minister. They're invited by the sitting president of India to form a government. the president of India, they effectively serve the same role as like the king or queen of England. Very ceremonial. They're technically like the head of state and like the head of military power, but nobody fucking cares whatsoever what they do other than inviting the prime minister to form a government. So this year, the top two candidates right now are, of course, the boy Narendra Modi, who has been in office since 2014, and his top competitor is a man by the name of Rahul Gandhi. No relation to Mahatma Gandhi, so don't get too excited on that right away. Modi is often compared to as like the Trump of India. He's not. That's a ridiculous comparison. He wasn't a reality TV star that hooked up with porn stars. He was very different, but their political philosophies are pretty similar. They're very populist-based, nationalistic. Modi is actually religious, and Trump pretends to be religious, so, these are very kind of similar things that they both have going for them. Gandhi, he's not necessarily comparable to anybody here in the United States. He's like a little bit more left-leaning than Narendra Modi would be, but if he was in the U.S., we would probably consider him like fucking Alex Jones or something, or at least that's what the mainstream media would do. So, the election, one of the most important things that this election is going to come down to is this last chart that I spoiled for us already, and this is showing Indian youth unemployment. So, Indian youth unemployment has basically been skyrocketing ever since they started keeping track of this data, and a large reason for that rise in unemployment right now, it is still over 18%, although it is moving back down in the right direction. For context, the U.S. youth unemployment hovers in the range of like 7 to 10%. So, 6% might not sound like a huge difference there, but it's India. We're talking about hundreds of millions of people, of course. So it's definitely a big deal for them. Now, basically, the reason being is that most youth in India were trained for IT roles. Or not most youth, but that was kind of like the big hot job sector when a lot of these people were growing up. And so that's what their education was gearing them up for. But the fastest growing sector in India right now is far and away manufacturing. So there's a little bit of a skills mismatch. This is what we call frictional unemployment, not necessarily structural. Structural is much harder to improve from. Frictional just requires kind of a retraining. It's a multi-year process in and of itself, but still is moving in the right direction. So Indians are going to have to decide between one of these two leaders to get them out of that and to get them out of the rest of their political philosophy. We do dive a little bit further into exactly what these candidates are offering in the piece, so make sure to go ahead and read that. But of course, before we let you guys go here today, fuck me, dude, I really got to figure out how to work this shit right here. I don't even know if I'm going to keep doing it because I really don't think that you guys can read these charts. But nonetheless, let's go ahead and finish up a quote from the Indian Warren Buffett, Mr. 𝗪𝗪𝗀𝗪𝗀. He said one time, this is one of my all-time favorite investing quotes right here. He said, if you don't make mistakes, you aren't really trying. Personally, my version of that is, if you ain't cheating, you ain't trying. I forget what movie that's from, but that quote is basically inspired my entire life story. So it's great to see that the Indian Warren Buffett clearly agrees that if you ain't cheating, you ain't trying. If you don't make mistakes, you aren't really trying. So next time you fuck up, just remember that. Otherwise, that about does it here for the day, guys. It is 8:09 p.m. I've once again been yapping for way too long here. I think my girlfriend and my dog are going to be pretty upset with how long I've been in this room. But I do have a big softball game to go to right now. It's playoff season, baby. So make sure to leave those good luck comments. I mean, the game's going to be over by the time you see this video, so it doesn't matter whatsoever. I just really hope we win. We'll see what happens, and I'll, of course, have an update for you guys tomorrow, because I'm going to be sitting on my hands with no Celtics to watch for quite a bit. So you guys are going to be fortunate enough to not have us miss a day. Let us know what else you want to see going forward, yada yada, all that good stuff. Happy investing, happy trading. Bye now.